All right. I believe we are live. Welcome, everyone. Welcome. Thank you for being here. All right. I'm on my own today, so I don't have a moderator. As you come in, please welcome. Thank you for being here. I'm going to give it a couple more seconds to give a little bit more time for those that are trying to make it, that are still jumping on. All right. Here we go. Here we go. All right. Okay, so we are good to go. Let me see how this works here. All right. So we are talking about some changes to the FAFSA. So if you are joining us and maybe you're new to the FAFSA, maybe you've done it multiple times, thank you for taking the time out to be a part of this particular webinar. I want to make sure I address some of the things that I feel are important. Hopefully there are things that actually matter to you and your situation. Let me make sure my full screen is up and showing. Let me see here. I'm not the most tech savvy person, so please forgive me for that. I think we are good. If you have comments, you can definitely leave them in the chat window. Let me see here. All right. Okay, cool. So as you come in, please, if you can comment, and I want to make sure you can hear me, please go ahead and either comment, give me a thumbs up where I can hear you. Also, let me know what state you are joining from. I know we have people in different parts of the states here in the U.S. Please let me know where you're coming from. I'm here in Southern California. So let me know where you're coming from so we can definitely get to know each other. So also, I just want to let you know, as before I really roll into this or jump into it, I want to be respectful of everyone's time. Okay, so I would do my best to keep this webinar under 30 minutes. There's a lot of changes. Some of them are official, some of them are not yet. I'm going to talk about some of the ones that I think are really important to know. Also, I'll give you an opportunity to definitely reach out to me and talk to me as time goes. You can always schedule an appointment, reach out to me, or speak to someone on my team. We'll definitely answer some questions and give you some guidance. I have no moderator, so if you have questions and you put them in the chat, please, I encourage you, I welcome you to add your questions to the chat, and I'll do my best to either address and answer those questions live, or I'll reply and get back to you shortly after. So my apologies if I cannot answer a question during this webinar. I wanted to keep it short for many people in different time zones. Also, I will be discussing important updates, but possibly not every update, since many of them have not been confirmed. But once they do, or once they are confirmed, I'll definitely make sure I communicate some of these updates and changes that come about between now and when you actually complete the FAFSA via email or social media. So I'll definitely do my best to make sure you are aware of some of the new changes that I don't uncover or haven't been confirmed in this particular webinar. And as new information becomes available, I'll confirm it before I make sure I send it out to you as facts. So we got Michigan, we got Texas. I know we have a few people from California, Oregon, Iowa. Thank you again for joining. Let's go ahead and jump into this. So briefly, I'm going to talk about who I am, why I am doing what I do, and if we haven't met before, you have a brief introduction to me and who I am, but I don't want to bore you with who I am as a person. I want to talk more about not only the FAFSA, some of the changes, but also some of the solutions. So I'm the bald head guy. This is before I had a beard. I'm the bald head guy that you can see in some of these. Let me see. There you go. In some of these photos, I'm a dad. Probably most importantly, I'm a dad before anything else. This is my family here, my wife, my kids. So I'm a parent, just like many of you that are on this particular webinar. I just want you to understand that the college bullet, the financial thing, the stress, the emotional roller coaster, it does not, I do not avoid that because I'm a college planner and I happen to know a little bit more than the average person. So I just want to let you know I am a family. I have 3 children that I have to get through college, and we're in this journey together. So also, if some of you may have found me or know about me from my YouTube channel, or maybe I send you a scholarship list. Again, thank you for being here. And if you're not a member or subscribed to my YouTube channel, I provide a lot of content there. You can always check me out and find out new things, learn new things about, college planning, financials, scholarships, financial aid, all that kind of stuff. But anyhow, this is who I am. This is me. And that's a brief introduction. As I mentioned, I'm a dad. Those are 2 of my oldest children. My daughter's in college now, and then that's my son who's a sophomore in high school. And this is me again. And this is kind of what I do. My expertise is in the area of financial aid, scholarships, funding, all that kind of stuff. Again, I don't want to bore you with my introduction, because I know we're here to learn about the FAFSA. And then we as a team, as a Grade Above College Planning, what we do is we help families and students when it comes to the school selection, the admissions, the financial aid, all those things. You can check us out at gradeabovecp.com. But me, I represent a team of other individuals that are awesome at what they do, and we help families ideally reduce their out-of-pocket expenses for college and get the best opportunity for their students. All right, so with that being said, let's talk about the FAFSA. Okay, this is why we are all here. Let's go ahead and talk more about this whole thing that is so stressful for so many people every single year. And there's some changes to make it even more difficult, more challenging to a lot of the people that have to go through this process. So please, before I talk more about the FAFSA, let me know if this is your first time. I want to kind of get a gauge of your experience. You could type a 1, a 2, or 3 plus maybe in the chat, where I kind of get an understanding if this is your first time around, or maybe you've done it before and you kind of are learning about some of the new things that are coming about. But just give me an understanding of how your level of experience as I talk about certain things. So before I talk more about FAFSA, I know there's a lot of myths out there, and people either want to do it, they feel like they have to do it, they don't want to do it. I'll talk about some of those things in the upcoming slides. But what I do want to mention, and this is very important, that when it comes to the FAFSA, I'm going to tell you why it's important for every family, regardless of your financial situation, to complete and submit the financial aid forms, okay? So right now, let's break that down. So 1, many colleges actually require the completion, right, of your FAFSA and or financial aid forms to qualify for their merit grant and or merit scholarships. So if you're a family and you just don't feel like you're going to have the ability to qualify, your student will never qualify for need-based financial aid, but they might qualify for merit scholarships. Most colleges, more and more colleges, are requiring the completion of the forms before they offer or award that, those particular funds to your student. So although you may not be a need-based candidate, you still want to, create or give your student opportunity to receive some of the merit scholarships. Also, your financial situation can change, right? Your situation today may be different in a year from now, 2 years from now. So it's always good just to complete the forms to knock them out. And in most cases, you do have to complete the forms, every single year. So also, you may ultimately, your student may want to apply, even though you may have a high income or a high net worth, your student may apply to a college that has a high cost of attendance. And, there is a chance at a high cost of attendance university that your student may qualify for need-based scholarships. You never know until you actually complete and submit the forms. And then ironically, this is the interesting thing about colleges. They actually sometimes will provide tuition discounts, right? Or financial aid in the form of merit scholarships to students that don't really need the money, right? So, and it's not a good thing. And I'm not proud to say that, but you can have one student who checks all the boxes, right? When it comes to the academic fit, but they have a need where another student may not check all those boxes, but at the same time, they have no need, and the colleges are looking to provide opportunities to students that can pay them more money, right? And give them a small discount to entice that student to want to attend that particular university. So no matter what, complete the FAFSA forms or the financial aid forms, because it could make a big difference in what your student is going to receive, not just in the need-based side of things, but also on the merit side of things as well. And then let's jump into this. So key updates we want to talk about or know about. So The FAFSA is going to be simplified, right? One of the big things they want to do is simplify the FAFSA. So as you can see here, it's going to go from about 100 or more questions. I think it's right around 108 questions previously to under 40 questions. So this is going to be a simplified process, making life a lot easier, giving you, again, no excuse not to submit the forms, but a simplified process, more user-friendly, more reliant on the IRS data retrieval tool, right? The IRS data retrieval tool where it collects your tax information, less likely to go through verification. So what I mean by verification, sometimes people refer to this as an audit. Not really an audit, more of a verification where you submit information and it's not really, adding up, it's not clear, and then your particular information is subject to a verification. Sometimes this happens when there's an issue or there's somewhat of a discrepancy. Sometimes it happens, and often it happens randomly. But this is going to be less frequent in the moving forward, when most of the information is going to be coming from the IRS data retrieval tool, where the information is going to be accurate, and it's less likely that you would be chosen to verify the information provided, unless it's a crazy huge change from one year to the next. Your information could be verified, but for the most part, we're going to see less of those in the upcoming years. Expected family contribution, EFC, will become your student aid index, SAI. So we're going to go from EFC, if you're new to this process, EFC is the expected family contribution, as you see there, to a student aid index. And then submission date, this is a big change, is looking to go from October. That changed a couple years ago. They made it October a few years ago, but it's looking to go from October to January. Okay, so again, I don't think that January date is official, but from many sources, that's been verified as a new date, and I'll confirm that with you as we get closer to that date, but from October to January. So, and it's always going to be a prior year or a 2-year look back when it comes to your tax returns. Okay, so October to January. Now, when it comes to multiple students, and again, I'm mentioning some of the important updates that I think you need to know about, and I may not go over every update. I want to keep this for 30 minutes or so. We can talk again, but when it comes to you as a family, if you have multiple students and or children in your household, households with more than one college student enrolled in college simultaneously won't get a break when it comes to financial aid eligibility. So, and also when listing household members, dependents must be listed on or as a dependent on your tax returns 2 years prior. So let me explain what you're looking at right here. So when it comes to households with more than one college student, before you got a break on your expected family contribution. If your EFC was 10,000, now you have a second child in college, your EFC may be 5,000 per child. Now it's going to be more like 10,000 per child. There's no discount, there's no break. So, and it's also going to be a student aid index, not an EFC, but you get no discount, you get no break when you have multiple students in college at the same time, which is really tough for a lot of families that planned on having kids, 2 or 3 years apart, and college is coming. Now you don't really get the break if you were a need-based candidate for one or both of your students, or 3 or more of your students, depending on how many students you have in college at the same time. Also, when it comes to the household members, so when you're asking the FAFSA about how many people are in the household, including your dependents, now, depending on your situation, marital status, your household situation, if you have a student that you're claiming, right, for taxes, for example, if I'm divorced, I claim one and my wife claims the other, my ex-wife claims the other, or we have an interesting situation where we have an agreement how we claim our children, if whoever is going to be submitting the FAFSA, the financial aid forms, they need to have had that particular child, maybe not a college student, but that child on their tax returns that are going to be used during the IRS data retrieval tool or the prior year. So if you're completing the FAFSA for 24-25, which where all the changes are going to be happening, this is going to be based on 2022 tax returns. That could be a little confusing, and I'm always available to clarify and answer more questions, but just know that you cannot, add a dependent that is not showing on your tax return from the year that they're going to be using your income information to give you your student aid index or your aid eligibility data, if that makes sense. So don't want to beat that up too much because there's other things that I want to cover, but I'm available to answer some questions should they come up, because I know that can be a little confusing, and I just want to make sure I don't make it more confusing by trying to over-explain it. So also, when it comes to split households, so the parent that claims a child on the taxes must provide their information on the FAFSA, right? This is also a big deal. So again, if you have an agreement with your ex and you're in a split household, it's really important that the parent that's claiming that student is also the parent that's completing and providing the information. In some situations, if one parent has a higher income and they may be contributing to the household or from a child support and or alimony standpoint, they may be also the parent that wants to claim that student. But in this particular case, this is going to be a negative impact where that parent who has a higher income will also be required to provide their information when completing the FAFSA. So this is another change that can hurt a lot of families depending on your situation. So also moving forward, parents that are separated will need to provide legal documentation indicating that they're separated. So if you were married and now you're separated, before you can say separated, even if you lived in the same household, you weren't supposed to do that. And I don't know exactly how they're going to be verifying this information, but moving forward, they want legal documentation showing or indicating that you are separated, legally separated, which is again a negative for some families out there that are providing and completing the financial aid forms. Step parents must also provide income and assets as well as the filing parent, if the filing parent has been remarried at the time of completing the financial aid forms. So if you remarried before, the step parent's information wasn't always required depending on how you filed your taxes, more so when it came to assets. But now when it comes to assets and income, the step parent's information is also going to be included when completing the financial aid forms. Again, all these things will verify. And one of the crazy things about the FAFSA, the new changes, some of them we know about, some of them we don't fully know about, and this is going to be new for a lot of people. They're making some huge changes. We don't know exactly what's going to be on the application, but we have a good understanding just based on resources and information and doing a lot of research. So as these things become more and more clear to us, we'll try to be very transparent with you and make the information available. But this is new to a lot of people. And we won't know everything until actually we go through the process. But these are some of the things that you want to be prepared for. So reportable income. Gifts will no longer be reported as income. So that's really big. That's really cool. So gifting to the student won't be reported as untaxed income. So also grandparents or non-immediate family members who own a 529 or want to help a student out with the 529 program, and qualified distributions will not be reported also as untaxed income. So that's a plus for those of us that have relatives or parents that, that want to help our children as grandparents, when it comes to 529 programs. Also gifts that are coming from you, and I'll talk a little bit more about that, won't hurt the student depending on how the gift is made to the universities. Now, no longer excluded is going to be your small business. This is also a big deal. So when it comes to small businesses with less than 100 employees, before you did not have to report anything, no valuation as that you own the business. Your income can be, $100,000, $150,000, $1 million. You never had to report that. But now moving forward, and I don't know how they're going to value the business, but the business, I believe, is going to need to be reported as an asset. So you can no longer exclude your small business or your family farm when it comes to completing the financial aid forms. And that's also a big deal for many people who are self-employed and or who own a business. So the business must be valued and reported as an asset. If you earn, this is a plus, if you earn less than $60,000, you may not have to report your asset. So that is, I'll talk a little bit more about that. But as a small business owner, if you own a corporation, you pay yourself a salary, you may have the ability or the opportunity to not, pay yourself as much as you have in the past, which could also help and in turn give you the benefit of not having to report your assets depending on your asset situation and or value. So hopefully all that kind of makes sense, and I didn't speed read through that. If you have questions, again, if you're watching this on our website, there's a link below. You can always schedule a free call with me or my team. We'll answer more questions. I'll try to make sure a link is available. If you're watching this on YouTube or Facebook of that nature, you can always reach out to us and book an appointment, and I'll make sure my information is available to you. But we want to talk about what do you do about some of these changes. Now, one thing that's very clear with some of the changes as it pertains to FAFSA is that they're making it very much harder for middle income, middle class to upper middle class families to be able to afford college. Now, it was already pretty challenging. College is becoming a lot, very, very expensive, a lot more expensive than it was obviously 20, 30 years ago. But they're making that even harder, right? They're saying, well, middle to upper middle class families really, if you have double or dual income, multiple children, you kind of have to figure out a different way. There's not going to really be much opportunity for you to get financial aid. That's pretty much what's happening. So I'm going to give you some strategies, some ideas that you can consider, okay? And also that might be able to help you address or counter some of these changes to put you in a better situation. I always want to say as a disclaimer, okay, just remember that to always consult with your legal, tax, and or financial advisors before implementing any strategies related to your finances, okay? Also understand that these are general recommendations that could benefit your ability to pay for college, but this is not investment, tax, or legal advice. These are simply ideas that do work for many families that we've consulted with over the years that you also can use, but first consult with your advisors before you implement any of these strategies, okay? So I'm gonna talk about a few of them, and this is also regardless, I don't know who's on. Some of you might be high income. I'm gonna do another webinar for small business owners and high income individuals where we're gonna talk about some of the tactical things that you can do to benefit your situation. But I'm giving out some advice now that is very general. So I don't know your situation, but hopefully this information is beneficial to you, at least some of it, right? So possible things to consider. One is gifts for tuition. I mentioned that a little earlier. So when it comes to gifts, right, you can gift, you or a relative make directly to the college of your child's, for your child's tuition. Okay, this would not reduce the $17,000 gift tax exclusion for your child, but the gifts must be made directly to the university for tuition. Now, I don't know everyone's situation here, but if you have the ability to write a check and pay the college, directly, or you're going to pay for tuition regardless, it might make sense from a tax perspective to gift, the tuition or at least a portion of it directly to the university. This will not only reduce your taxable estate, but it also may be a tax benefit when paying for school versus paying directly out of pocket. Also, we're going to jump ahead. This is max the match, okay, when it comes to your 401k. Consider maximizing your 401k contributions up to your employer's matching limit. Okay, we're talking about some strategies here. Now, you can use the cash flow from your college allocation if you plan on, hey, $1,000 or $3,000 a month is what we were planning on doing. You can take that money, if possible, apply it to your 401k up to the match, right? And then you can always borrow against your 401k for college costs if required. If your student doesn't get scholarships, they don't get favorable opportunities, you can always tap into that resource. But here, the strategy helps you not only fund your retirement, but also reduce taxable income, and it provides a college fund. So again, you can consider this or consult with your advisors. But if, for example, if you contributed $5,000 to your 401k to enhance retirement savings, if you're in about the 25 to 30% tax bracket, that's a $1,500 a year savings in taxes, okay? And a larger balance for potential college expenses when you get the match. So that's something worthy of consideration. So moving forward, we're gonna talk about, let's see here. There we go. So you wanna avoid, let me see. Oh, lastly, if you own a business, I'm sorry, I skipped over this one. Pay yourself and or pay your students, self-employed and or if you own a corporation. Again, we can talk more about that. But when I mentioned earlier, if you're under a certain threshold when it comes to income, you might have the ability not to report your assets, depending on your asset value and or your net worth. So if you can pay yourself, this is the time to evaluate what that looks like, how to do that in a cost-effective way, but also paying your student, if you're self-employed, can give not only for example, if you have tuition, you give $17,000, and then you pay them another $9,000 because they're increasing the income protection allowance. You pay them another $9,000. Now you have about $26,000 that you've paid out in a tax efficient way. So again, consult with your tax and or investment advisors about that, but that could be another way to reduce tax liability when paying for college, to help you make it more affordable, especially if the colleges are not going to give you financial aid. Okay, and I have some simpler strategies here that have come up, but I just want to make sure I mention some of these important ones depending on your situation, and I'll talk to anyone one-on-one. So avoid unnecessary withdrawals and or bonuses. If you have the ability to receive a bonus and or you can dictate how that bonus is going to be distributed to you, maybe you are, again, self-employed, or maybe you have the ability to postpone or defer a bonus, this may be a good time to do that during the base years. So the base year is always going to be 2 years prior that they're going to be looking at when it comes to your financial aid eligibility. So avoid taxable and non-taxable withdrawals during the college years. Examples include retirement accounts, taking money out, annuities, life insurance, taking money out as income. Life insurance, I know you have the ability to take out loans and or withdrawals. I'm referring to withdrawals here, as well as taking money out of pension plans depending on your situation. Otherwise, the withdrawal will be assessed as income in the financial aid formulas. So avoid the sale of appreciated investments during the base years. And this is to avoid the income being assessed again as a part of the financial aid formulas, increasing or decreasing your students' aid eligibility. Consider selling investments that would generate losses. If you know you're going to take a loss or you have been taking a loss, this is a time, if you're thinking about jumping ship, where it could be beneficial because it'll show less income and give your, depending on the numbers. Now, again, if you're talking about $3,000, depending on your situation, that may not make a huge difference. But depending on the numbers, this can be to your advantage to not only consider, but also consult with your advisors about the pros and cons of some of the things that I'm mentioning here. And then also, you want to postpone salary bonuses, as I mentioned a little earlier, during the base years. I talked about that in the beginning, but I just want to mention that again, especially if you pay yourself a bonus and you're self-employed. Also, before you sell it or give it, this is important. If you are someone who contributes to, charitable contributions on an annual basis, contributing from assets can be a plus because it depreciates your net worth. Contributing from your income can be a drawback because it could be added back to your AGI within the financial aid formulas, hurting your students' chances of being financial aid eligible. So again, that may be a little confusing, but if you have questions, please reach out to me. We could talk more about this. And there's a lot of other things you can do, but I can't mention everything here, not only for the sake of time, but also I don't want to bore many of you here, depending on your situation. Some of this information may or may not be relative to you. So more things to consider. Valuing assets, okay? So this is really important because it seems like there's going to be more of an emphasis on assets. So net value of your asset is to mean the taxes on the gains, right? That whether realized or not, if I have a specific asset, I may have to pay taxes on the gains, right? Any costs associated with brokering of that investment should be taken into consideration and deducted from the market value. So you have to, consider all your costs. If you were to liquidate or sell off that asset to pay for school, everything that you're going to incur as far as your costs, you want to make sure you factor all that in before valuing your asset. Okay, do not give just the market value, right? Shave off all those percentages, whether it be capital gains at 15%, whatever that might be, and then come down to your net value. Okay, not market value, net value. Really, really important that a lot of families understand that have assets that are going to be counted against them when it comes to the aid formulas. Also, when you value your real estate or rental properties, do not use Zillow or the market value. I don't encourage that. People have different thoughts and opinions, but Zillow, I always say if you have rental properties, they're only worth what someone is willing to buy them for, right? And you really can't prove that. So what you can prove sometimes is your tax assessed value. So depending on your situation, if you have properties, we're not talking about the cash flow that is coming out of the properties. We're just talking about the property itself. Or if you have vacation homes, We are talking about if, again, the net value, what you can actually justify if you were to be verified, right? And that is not going to be Zillow, Realtor.com, or any market value. It's going to be what you actually can take to the bank. And preferably whatever is lower is what you would use depending on your situation. Also, pay it down. So if you have any assets that you have the ability, cash, in a savings account, consider using investment assets to pay down personal debt or prepay personal expenses. We know we want to buy a new car, or we can prepay for certain things. Pay that down from your asset bucket to lower that asset and cover a cost that you're going to have to cover regardless, no matter what, especially if you have some high interest rate debt. And we'll talk more about that. Most people who have a lot in assets don't have a lot of high interest debt, but just want to mention that. So other solutions to consider. So pay off or pay down high interest debt, just mention that. If you have a 15-year mortgage, you may want to consider, and I know interest rates are not favorable, but consider refinancing to a 30-year. People don't like that, but it's worked well for many other people. Depending on your situation, this is something that you can consider because it will give you more cash flow without having a negative impact on your student's aid eligibility. So it's not going to have an impact on your income or assets, but it will give you more cash to pay for school. So, and cash is king. Reconsider overfunding your 401k beyond the match. So for those of us that are maximally funding our 401k, we have a match at 6% or 50% up to 6%. Reevaluate your over contribution because that money could be used to pay for school. Plus, anything that you contribute to your 401k will be added back to your income as untaxed income, or added back to your AGI, as untaxed income, making your student less aid eligible. So the more you pay in taxes, the more chances they can receive financial aid. But also when it comes to overfunding your 401k beyond the match, that could be money that you can put towards paying for college. But again, I don't know your situation. You have to evaluate these options. Be sure to take advantage of all the tax credit, lifetime learning, depending on how many years your student has been in college, or you personally, and then also your American Opportunity tax credits. So that's right around $2,500 a year. But that's also a great way to increase cash flow when paying for school, especially if your student is not getting much need-based financial aid. And then these are also some possible things to consider that are a little bit more practical, less reliant on the financial side of things, but school selection is crucial. There's an asterisk here, and also here, because depending on your situation, if this is your first year completing the financial aid forms, this may be something that you can do or pay attention to. If you've been in the process multiple years and your student's already in college, please be patient with me. I'm going to talk about a few more things that you definitely want to look into. So when it comes to school selection, the reason why I say that's so crucial, it's really important that your student selects the best fit, the right college for them that is going to have a good chance of not only accepting them, but giving them the money they need to pay for school, at least 25% of it or 50% of it. All of that helps, especially for a quality education and college experience. So also continue to research and do the planning for not only the best fit colleges, but again, the colleges that your student is actually they're going to want your student, right? They're going to want to accept your student, and they're going to actually showcase that or that desire by giving them money and scholarships. So that's really important, especially if you're in the planning process. And if you're not, okay, I understand, and we'll talk a little bit more about some other things. So when it comes to completing the financial aid forms moving forward, work study and subsidized loans can be beneficial. Work study is when your student can actually earn a little bit more money. They can work and earn money and not go against their aid eligibility. So work study could be very beneficial depending on your student and where they are in the process. Also, subsidized loans. Now, there's a max on how much a student can actually take out in Stafford loans, but the subsidized loans, are the beneficial or the good loans where the interest rate there's a deduction, there's some benefit, and it's a subsidy, right? So subsidized loans can definitely be beneficial for your student. Also, you want to focus on private scholarships. Some of you have worked with me, some of you may not have, but when it comes to private scholarships, this is where I think a lot of your attention and time should be placed. There's a strategy, there's a system that you should employ to win scholarships, but whether you have your own strategy or whatever that might be, I don't recommend you just go after it and just go crazy and have your student, apply for every scholarship. But definitely employ a strategy, implement some type of a process, but have a focus on private scholarships, because believe it or not, some people actually finish college completely debt-free by utilizing private scholarships. But it also goes back to selecting the right college, the right fit, and all those other variables that kind of go into the whole picture. And there's tons and tons of scholarships. There's first generation scholarships, minorities, religious, employee, athletic, military, club scholarships, community, major, specific scholarships, all kind of scholarships out there. So there's a lot of opportunity. You just got to apply the right method and the right system to winning those scholarships. And then grants, right? We all know grants are equivalent to scholarships when it comes to free money. Those are definitely useful. And then this is very, very crucial: appeal. Especially with a lot of the changes that are happening, I encourage and recommend almost every family that I meet with or that I talk to, that their student is not getting a full ride, to submit an appeal for more financial aid. Okay, file an appeal. Now, because of some of the changes, multiple students in college at one time, legally separated, you may have a lot of reasons to submit and file an appeal. So first of all, complete the FAFSA. Second of all, submit the appeal within a reasonable time frame to give your student a great opportunity to actually receive the financial aid that might be available for them within the appeal process. So when I say file an appeal, sometimes people associate that with negotiating. I would say appeal, aka negotiating. And it's actually part of a bigger plan that I kind of teach and talk to people about. But showing your cards too soon can always and often cost you your hand. So what I mean by that is, when appeal, we want to strategically ask for more money. Okay, so this is what it looks like. I'm not going to bore you with the appeals process. I have YouTube videos on that, and you can always schedule an appointment and talk to me about it. But you want to ask for more money. This is really important, especially with some of the changes and updates coming to the financial aid forms. This might be beneficial. And if you get an extra $5,000 a year or more, that's big, especially in a 4-year university. That's $20,000 off of what you're going to be paying for school. So I always encourage, with the right process, again, the right process, right system, submit an appeal and ask for more money. So this is a family that I worked with recently. Christina sent me a text saying that they submitted an appeal, right? With my advice, some guidance, and her student was able to get about $4,000 more. So again, $4,000 is it's not a lot, right? But it's something. It's $4,000 less that she has to come out of pocket and pay for. So definitely file an appeal. And then I won't go over this too much. You can see it here. When it comes to paying, this is what I think you should do. I'm going to jump to the next page because I think this is probably more important. But one, you got to understand the financial aid determination process. The formulas, as they come up, as they change, will definitely keep you informed. And I'm wrapping up here. It's going to be different at different colleges, right? Federal methodology, institutional methodology is going to be different at different colleges. You need to understand, especially if this is your first time around, what that looks like in your situation. 2, how to answer the financial aid questions accurately, right? To maximize your students' potential receiving financial aid. 3, not all aid is created equal. How is your aid being provided? How is your need being met? Really, really important that you don't just accept anything that's out there. And then lastly, how to determine if your child's award is fair, right? And if you should accept it. Is there more money out there that you should be going after? And you want to understand these 4 things that are going to maximize your students' potential and ability, not only to get more financial aid, but also to help you reduce your out-of-pocket expenses when paying for school. So I'll leave you with this. Are you ready for the FAFSA? You can always contact us for help, right? It's coming up in January, but the planning starts now for many of you, depending on your situation. And then I just want to make sure if you're on the link on the website, you can always book a time to meet with us there. If not, you have my information here. This is my direct number, and that's my email. It comes to me. And then you can also view content on our website at agreeabovecp.com. And if you want to hear or interested about our 5K challenge, and you can hear from some other parents that we've had the opportunity to work with, gradeabovecp.com/5K challenge. So I hope this is helpful. I'm right around a little over 30 minutes, 35-minute mark. But if you have questions, if you have concerns, forgive me for not spending much time looking at the chat, but I definitely want to make sure that I went over some things that I felt that was really important. As new things come about, I'll definitely inform you and keep you updated on some of the changes. But in the meantime, good luck to you. Use us as a resource, and anything that I can do to help you or your student out, use me, and I'll gladly make myself available to answer your questions and guide you in the right direction. Have a phenomenal rest of your day, and then we look forward to hearing from you all soon. Thank you.